Well, it was a bit of a non-event, really. We heard it all before. Essentially, well, the information was leaked all before.
Welcome to The Professional Investor. This is a new podcast series where we go inside the mind of a UK-based professional investor. We'll be exploring the secrets of asset management, get the inside scoop on the latest developments from the front line of the investment industry, as well as get analysis and opinion on what is going on in the economy. If you're interested in what goes on inside the mind of a professional investor, this is the show for you. This podcast, all opinions and information are for educational purposes only and do not constitute investment advice. Trading and investing carries a high level of risk and are not right for everyone. If you need financial advice, consult with a regulated financial advisor in your country before making any decisions. Hello, I'm Jonathan Bramall, and I'm delighted to introduce you to today's professional investor, Chris Boxall. Chris is co-founder and portfolio manager at Fundamental Asset Management. He has 25 years as a professional investor under his belt, having worked in New York as well as the UK. Back in 2004, Chris and his colleague Stephen Drabwell brought an American approach to investing over to the UK when they founded Fundamental Asset Management. The firm, as well as managing general portfolios, has a focus on smaller companies on AIM, including running a specialist AIM for inheritance tax portfolio service. On top of this, Chris is the long-term editor of the popular research site Investors Champion. Thanks for being on the podcast today, Chris.
Hello, good to be here.
Yeah, pleasure to have you. We'll crack straight on, and I'm interested to know your just overview thoughts on the budget last week.
Well, it was a bit of a non-event, really. We heard it all before. Essentially, well, the information was leaked all before. We had the news of the national insurance cut, and that was the headline-grabbing item, really. From our perspective, we had news of potentially a British ISA. That's going to be an additional £5,000. On top of the £20,000 ISA allowance that will be available to be invested in UK listed companies. That's the intention, I think.
And you welcome that broadly, do you?
Well, it's not very much, is it? It's a trifle. Reading a lot of the commentary that's come out since, it's evident a lot of people never even use their ISA allowance. And for those that do use it, not their ISA allowance in its entirety anyway. For those that do, yeah, clearly it's an encouragement, but I'm not sure it's going to really prop up the UK stock market as its intention. And I'm not sure actually that UK stock market needs that kind of support either. That's our view. I mean, we're keen on UK stocks, but we think investors should be able to invest anywhere and be encouraged to invest in international markets as well. And if they had done over recent years, they'd have done very, very well.
And so, from your perspective, yes, fine, but somewhat of a trifle, to use your word. And so, what would you have liked to have seen?
Well, I would have liked to have seen more initiatives to support growth. And around that, I think an expansion of the EIS reliefs, the Enterprise Investment Scheme relief, and the CDI Enterprise Investment Scheme relief could have been really beneficial. And sort of expansion of the reliefs to support, say, technology, pharmaceuticals, not all types of businesses, but specific categories that justify really support and take longer to come to fruition, that need patience. So I think that would have been more helpful. The current EIS rules are quite restrictive. They have been enhanced over the years, but they still really support very, very small companies. And I think it would have been quite good if they could be expanded to support slightly larger ones, which would encourage more investment.
Thanks, Chris. Would you mind just briefly for our audience that aren't so sure about what the EIS scheme actually is? Would you mind going through that briefly?
Yeah. If you're a UK taxpayer, you can invest in companies quite under the Enterprise Investment Scheme and receive 30% income tax relief on the year of investment. Also, if the shares are held, and they can be both listed company shares and private companies, if they're held for 3 years or more, there's no CGT, no capital gains tax to pay on any resulting gains. The maximum is £1 million per investor per annum, or 2 million for a knowledge-intensive company. So that's clearly quite high. And But there are a lot of people with an awful lot of money tied up. A lot of it probably parked in fixed income at the moment that could be encouraged to be released into EIS qualifying companies. The companies themselves, in terms of restrictions, they can only raise up to £5 million each year and up to a maximum of 12 million. So
Right.
you can see by extending that it could be quite interesting.
Absolutely. And you've mentioned something you'd have liked to have seen. I was aware of something that was missing, and I'm interested to hear your take on this. On the 27th of December, the Daily Telegraph stated Number 10 plans to end inheritance tax. On the 28th of December, the Daily Mail stated Jeremy Hunt draws up a plan to slash inheritance tax by half. What do you think? Why do you think ultimately inheritance tax was not changed in the budget?
I don't think it's going to be an election winner, and I don't think it would have been a very timely move to sort of support the well-off at a time when so many people are struggling. I mean, it's a tough environment. Interest rates have risen, mortgages, the demands on your mortgages have increased, and I really, don't think it would have been a great political move to say the least. And we've been running these portfolios, our AIM inheritance tax portfolios, for many years. And this rumor about IHT changes it's come up every year or twice a year, and we haven't seen any changes since. And I think there were bigger matters to address rather than inheritance tax.
Thank you. In the Financial Times on Tuesday, the 5th of March, it stated that you had called on the CEO of the London Stock Exchange to make a number of changes. What were they? Could you explain that to our listeners, please?
Yeah. I mean, I just think the London Stock Exchange is just utterly lacking dynamism. It's utterly dull, as one of my colleagues mentioned. It's you just have to go. I would implore anybody to go on the website and have a look. I know website's not everything, but it's often the first sort of port of call for many people. Go and have a look. It hardly inspires you. Although one of the banners does say that it inspires, but that's really not the case if you bother to have a look and compare it, for example, with the Nasdaq. I mean, there's far more effort going into the Nasdaq's front piece than the London Stock Exchange. So I just think it needs a bit of a kick, and it just seems totally disinterested, and probably more worried about selling lots of data from which it makes most of its revenue nowadays. And we've suggested that it run a marketing campaign highlighting the success of companies on AIM. It's a market we like. It's supposed to be a growth market. We'll highlight the success of these growth companies, but also on the main market as well. I mean, put some marketing spend behind it. There should also be a cap on the fees that AIM companies pay. I mean, from our perspective, we think entrepreneurs and sort of founders of these small businesses probably balk at the high fees being leveled on their creations by city advisors. They've been trying to grow their business and saving, and now they're subjected to millions of pounds worth of fees just to list their company and raise relatively little new capital. And these a lot of these advisors really offer little support following admission to AIM. And we'd also like to see a limit in the number of non-executive directorships held by AIM directors. It's really become a bit of an old boys club where a lot of these non-exec directors hold multiple directorships, collect their fees, but really don't participate very much in their companies or indeed in investor relations activities. Finally, we think there should be a kite mark for LSE approved, that's London Stock Exchange approved, independent research providers. So there's more research on offer for people that are interested in these companies, and the London Stock Exchange should provide a centralized hub for the publication of this research. I think that'll be good. All these these are small things, fairly basic. It's not going to cost very much, and the London Stock Exchange Group makes an awful lot of money, and I just think it needs to make a little bit more effort.
Thanks for that. I mean, I'm interested in you drawing comparisons with the Nasdaq. I certainly remember going back to my early days in the finance industry that I remember seeing adverts for the Nasdaq here, there, and everywhere, and how exciting it seemed and appeared. You mentioned trying to draw sort of similar similar excitement to AIM and to the London Stock Exchange more generally. Could you point to any success stories, let's say in your career of AIM companies that have really kind of gone from zero to hero?
Yeah, I mean, there are countless tales, but I think two that come to mind and really illustrate the difference and the difficulties AIM have got is two companies in our portfolio, in our AIM portfolio. One's called AB Dynamics, and when it listed, it was only valued at about £12 million, but it was still profit. It was a small, profitable specialist engineering company that it went on the market for the founders to have a partial exit and to raise a bit of new money to grow into other areas. And it used the stock market to great effect. And from that 12 million, it was very, very modestly valued on listing. Its market capitalization now is over 400 million. It's made a few acquisitions, but that's what the stock market's there for. And the founders sold down a little bit more over the years, but that is a well-established business with a credible business model that came on the market and as I say, used it to great effect. And another little one called Dot Digital came originally. It was an email marketing company. Again, it was very small, but also profitable, and that's grown as well. It hasn't made many acquisitions, not as many as AB Dynamics, but it's still now substantially bigger than it was. Hundreds of millions of pound business, growing strongly in overseas markets as well, as is AB Dynamics. And this is the key, really. I think AIM should be a sort of good seedbed for small UK companies that are looking to grow, overseas growth, because that's the problem. Our own economy is rather sort of moribund and lackluster. Well, you're going to really you're going to find the growth outside in overseas markets, and those two businesses that I mentioned, are doing really well, really well.
Thanks a lot. I appreciate that. Chris, you've kindly given us time today, and I understand you've offered to come back for some future episodes, and I'll be going through that with our audience, some topics we're going to be covering in the coming podcasts. But for now, is there anything you want to draw the audience's attention to? Anything they should know about that you've got coming up?
Oh, we've got always a lot coming up with Fundamental. We've got a webinar coming up, which is going to sort of go back to the basics of investing in AIM for inheritance tax planning purposes. That should be quite fun, introducing how it all works, and it's a bit of a refresher. A lot of people may be aware of it, but I think it's it's always worth going back to basics to see how it all works and how it could pan out. So that's coming up in a few weeks' time, and you can
March
always go on to
21st, I believe. Is that right? March 21st?
March 21st. Yeah. So worth having a listen to that, and indeed some of our old ones as well. Our old webinars full of information. Well, often some of them go into more detail on the companies and what we think of the market, which could be interesting for those that are interested in investing in AIM quoted shares.
That's great. Thank you very much for that, Chris, and thank you very much for your time today.
Thank you.
So going forward, we're going to be covering topics such as how to construct a successful investment portfolio, why the smart money ignores stock price, how to find stock value, as well as how certain AIM companies have helped people leave more money to their families after they've passed away. If you're interested in what goes on inside the mind of a professional investor, this is the podcast for you. That's it for this episode. Please subscribe to The Professional Investor wherever you get your podcasts so as not to miss out on future episodes. And if you found anything useful today, please leave us a review, as it really helps us get the podcast out there. The more successful this podcast is, the more episodes we'll make. Thank you for listening.